Mark Mobius, a veteran investor, told CNBC on Thursday that Bitcoin prices could fall to $10,000, which would represent a drop of more than 40% from their current levels. According to Mobius, the move to $10,000 per Bitcoin could take place in 2023. However, he anticipates that Bitcoin will continue to trade around its current level of $17,000. If Mobius's call for Bitcoin to reach $10,000 is realized, it will be the latest depressing development for the cryptocurrency market, which has already seen a loss of value of over $1.3 trillion so far this year. Before going into detail, we want you to subscribe to our channel now. Mark Mobius, a veteran investor, told CNBC on Thursday that Bitcoin prices could fall to $10,000, which would represent a drop of more than 40% from their current levels. Since it has broken through the technical support levels of $18,000 and $17,000, the co-founder of Mobius Capital Partners, who correctly predicted that Bitcoin's price would fall to $20,000 this year, has stated that the cryptocurrency is not far away from reaching $10,000. According to Mobius, the move to $10,000 per Bitcoin could take place in 2023. However, he anticipates that Bitcoin will continue to trade around its current level of $17,000. According to the investor, who made his name at Franklin Templeton Investments, his bear case for Bitcoin stemmed from rising interest rates and general tighter monetary policy from the U.S. Federal Reserve. The investor made his name at Franklin Templeton Investments. Since simply holding the coin does not pay interest, the appeal of holding or buying Bitcoin or other cryptocurrencies becomes less attractive as interest rates rise, Mobius said in an email. With higher interest rates, the attraction of holding or buying Bitcoin or other cryptocurrencies becomes less attractive. Of course, there have been a number of businesses that have advertised interest rates of 5% or higher for cryptocurrency deposits. However, a significant number of the businesses that advertised such rates have failed, in part because of FTX. As a result, as those losses continue to mount, people become scared to hold the cryptocurrency in order to earn interest. There have been many businesses that have been offering investors sky-high interest rates in exchange for the use of their cryptocurrency to store it with them. These businesses frequently relied on the practice of lending their customers' cryptocurrency to third parties at extremely high interest rates, and then dividing the proceeds of those loans with their customers. However, as cryptocurrency prices plummeted and liquidity vanished at the beginning of this year, many of these companies went bankrupt. Celsius is one of these companies. It filed for bankruptcy in July of this year. Another example is the company BlockFi, which had a significant amount of exposure to the defunct exchange FTX. Mobius also stated that the rise in the value of cryptocurrencies was due to the printing machine working overtime so that money supply in USD rose by 40% plus in the last few years. He said this was the direct cause of the boom. Mobius continued by saying, there was an abundant supply of cash to speculate on crypto coin. During the past few years, the Federal Reserve has maintained extremely low interest rates and has participated in quantitative easing. This policy is widely believed to have contributed to the boom in certain market sectors, such as technology stocks and cryptocurrency. But throughout this year, the Federal Reserve has been working to tighten monetary policy by significantly increasing interest rates. According to Mobius, the current situation, in which the Fed is reducing the amount of cash in circulation, makes it significantly more difficult for individuals to participate in market activity. Mobius' predictions about the price of Bitcoin have been mostly accurate so far this year. When the price of Bitcoin was above $28,000 in May, he predicted to Financial News that the price of Bitcoin would drop to $20,000, then bounce, but ultimately move down to $10,000. He made this prediction when the price of Bitcoin was above $28,000. Even though it has not yet reached the $10,000 threshold, the price of Bitcoin has been as low as $15,480 this year. If Mobius's call for Bitcoin to reach $10,000 is realized, it will be the latest depressing development for the cryptocurrency market, which has already seen a loss of value of over $1.3 trillion so far this year. Bitcoin in relation to the larger economic factors. Jason Pagolatos, a markets analyst at Delphi Digital, offered his opinion that the current macroeconomic environment is another factor to take into consideration. Despite the fact that he claimed he had personally targeted the range of $9,000 to $12,000 for a number of months, he said that the current environment is another thing to think about. Pagolatos told Decrypt that macro-wise, this is the worst backdrop in over 50 years, adding that there will be no sustained relief in crypto until the macro tides reverse. Macro-wise, this is the worst backdrop in over 50 years, Pagolatos said. Combining many of the previous economic crises factors, inflation, energy, tech values, and home values, into a single year. According to Pagolatos, various cycles can historically take a long time, and it is not possible to simply unwind 14 years of monetary policy in 1 year. Liquidity is the most important factor influencing asset prices across the board, and it controls the world. It is going to be difficult until the liquidity conditions improve, he said. Bitcoin and Ethereum prices fall along with stocks amid unrest in China and fears of cryptocurrency contagion. He is of the opinion that the Federal Reserve, which had the federal funds rate pegged at approximately zero as recently as the first quarter of 2022 but has raised interest rates 6 times since then, will most likely shift away from its policy of tightening at some point during the course of the following year, most likely by the end of the second quarter. This would improve liquidity conditions more generally. However, Pagolatos cautioned that historically equity markets tend to have their final leg down after a pivot is implemented, before reversing. This would have the opposite effect of what Pagolatos predicted. Interestingly, the story of 2022 was the inflation story, and 2023, I think, will be the story of the recession, had added, pointing to the fact that this year the Fed has been tightening at the fastest pace in history. The story of 2023, I think, will be the story of the recession, had added. The analyst at Delphi Digital believes that there is a good chance that risk assets will have a successful second half of 2023. The more important question, as well as a more long-term one, is where inflation will be when this pivot comes, as well as whether or not it will begin to decrease once the pivot has been implemented. The views and opinions expressed by the author are provided solely for informational purposes and are not intended to constitute advice on matters relating to finances, investments, or any other subject. Share your thoughts with us in the comments section below. Make sure to like and subscribe to this channel for more updates and exciting news on crypto.